Out of more than 4,000 banks in America, only a tiny fraction are Black-owned. But what most people don't realize is that a few of these institutions aren't just surviving. They're quietly moving millions, financing real estate deals, backing small businesses, and tapping into government money flows that most viewers never hear about. Some have even survived decades of financial pressure that wiped out over 100 similar banks. So how do the biggest Black-owned banks actually make their money? And who's really at the top of this system? In this video, we break down how 8 Black-owned banks actually make money. Number 8. Carver State Bank. We begin our journey with one of the smallest surviving Black-owned banks in America, Carver State Bank. This bank is based in Savannah, Georgia, USA, but also one of the most historically important. It was founded to serve Black communities that were locked out of mainstream banking, and today it continues to operate under Black leadership through a governance structure made up of shareholders and institutional stakeholders rather than a single individual owner. Like most banks in this space, ownership is not concentrated in one person, but spread across a controlled financial structure designed to keep it stable and community-focused. But the real question is how it makes money. Carver State Bank earns its income the same way traditional banks do. Through the interest spread, meaning it pays depositors a lower interest rate while charging higher rates on loans. The difference becomes profit. Most of its lending activity is focused on small business loans, residential mortgages, and personal credit, especially within underserved communities that larger banks often avoid. What makes its model work is not scale, but structure. A significant portion of its lending is supported through government-backed programs like SBA loans, which reduces the bank's exposure to risk while still allowing it to collect interest income. That means even smaller loans can generate consistent returns without the same level of financial danger. So while Carver State Bank is small in size, its survival is built on a very specific formula: local deposits, controlled lending, reduced risk government guarantees, and steady interest margins. And that's the lowest level of this system where survival itself is the strategy. Because next, we move into banks that are no longer just surviving, but actively scaling influence and money flow in a much bigger way. 7. Citizens Trust Bank. At number 7 is the Citizens Trust Bank, based in Atlanta, Georgia, USA. Known as one of the oldest continuously operating Black-owned banks in America, and a far more structured financial institution than the smaller community banks below it. It was founded in 1921 to serve Black customers who were shut out of mainstream banking, and today it operates under a Black-led leadership structure with a board of directors and institutional shareholders rather than a single individual owner. Its management is focused on one core goal: expanding financial access while maintaining profitability in underserved markets. And that profitability comes from a more diversified banking model. Citizens Trust Bank makes money through the standard interest spread system, but on a larger and more structured scale than smaller banks. It earns interest income from mortgages, consumer loans, and commercial lending, especially targeting Black homeowners and small to mid-sized businesses in urban communities. But what separates it from the previous level is its exposure to real estate financing and community development lending, where long-term loans generate steady, predictable interest revenue over many years. It also participates in federal and state-backed lending programs, which reduces default risk while keeping cash flow stable. On top of that, like many Black-owned banks, it benefits from being classified as a minority depository institution, which gives it access to partnerships, funding channels, and government-linked deposit programs designed to strengthen its lending capacity. So instead of just surviving on small loans, Citizens Trust Bank operates like a scaled-up version of the same system, turning community deposits into long-term credit assets that generate consistent interest income. And now the shift becomes clear, because number 6 is where Black-owned banking stops looking regional and starts looking historically powerful and structurally influential. Number 6. Mechanics and Farmers Bank. At number 6 is Mechanics and Farmers Bank, often called M&F Bank, based in Durham, North Carolina, USA, and one of the most historically respected Black-owned banks still operating today. Founded in 1907 by a group of Black businessmen and leaders connected to the rise of Black Wall Street-style economic movements in Durham, The bank was created at a time when Black Americans were largely locked out of traditional financial systems. More than a century later, it still operates under Black leadership and remains one of the oldest Black-owned banks in America. But longevity alone is not what keeps M&F Bank alive. The real story is how it learned to make money in a banking system where scale is everything. Unlike very small community banks that rely heavily on basic deposits and personal loans, M&F Bank expanded its revenue model through a combination of commercial real estate lending, small business financing, mortgage lending, and institutional banking relationships. That means a large part of its income comes from financing businesses, property developments, and local entrepreneurs who often struggle to secure favorable terms from larger national banks. One of the bank's biggest advantages is trust within historically underserved communities. That trust attracts deposits from customers, churches, local organizations, and Black-owned businesses. Those deposits then become lending capital, and once that money is issued as loans at higher interest rates, the bank earns profit through the spread between borrowing and lending costs. But M&F Bank also benefits from something much bigger: strategic positioning. Over the years, large corporations and government-linked initiatives have increasingly placed deposits into Black-owned banks as part of diversity and economic equity programs. For banks like M&F, that creates access to larger pools of capital without needing the massive customer base of mainstream banks. And that changes everything. Because once a bank gains access to larger deposits, it can issue larger loans, finance bigger projects, and generate far more interest income over time. That's why M&F Bank represents an important turning point in this countdown. It's no longer just a small community institution trying to survive. It's a bank that figured out how to turn community trust, historical legacy, and strategic partnerships into a long-term financial engine. And from this point forward, the money only gets bigger. 5. Optus Bank. At number 5 is Optus Bank, based in Columbia, South Carolina, USA, one of the newer generation Black-owned banks that gained national attention after helping finance a major ownership stake in the company behind the fast-growing restaurant chain, Slim Chickens. That single deal suddenly pushed the bank into conversations far beyond traditional community banking and showed how some Black-owned banks were beginning to move into larger corporate-level financing. Unlike older Black-owned banks that built their business mainly around local deposits and neighborhood lending, Optus Bank positioned itself differently. It focused heavily on growth through commercial lending, business financing, digital banking expansion, and strategic partnerships. Instead of competing directly with trillion-dollar banking giants, Optus concentrated on underserved entrepreneurs, franchise operators, and minority-owned businesses looking for access to capital. And that's where the money starts getting much bigger. When a bank finances franchise growth, commercial properties, or expanding businesses, the loan sizes become significantly larger than standard personal loans or small community mortgages. Larger loans mean larger interest payments over time, and for banks, interest income remains the core engine of profitability. But Optus also understood something many smaller banks struggled with. Visibility matters. As conversations around racial equity and Black business growth exploded across America, corporations and investors started directing attention, partnerships, and deposits toward Black-owned financial institutions. Banks that were once operating quietly in the background suddenly gained access to larger pools of money and stronger business relationships. That gave Optus the ability to expand its lending capacity while growing its reputation nationally. The bank also leaned heavily into digital banking services, allowing it to attract customers outside South Carolina instead of relying purely on local foot traffic like older community banks once did. That shift matters because digital customers increase deposits, and deposits give banks more capital to lend. So while many people still imagine Black-owned banks as small neighborhood institutions, Optus Bank represents a different model entirely. One focused on scaling through business financing, strategic media attention, corporate partnerships, and modern banking infrastructure. And now the countdown starts getting serious. Because the next banks on this list are not just growing institutions anymore, they are deeply connected to major real estate money, government-backed lending systems, and billions in managed assets. Now to number 4, Industrial Bank. By the time you reach Industrial Bank, the conversation changes completely. This is no longer just about survival, local lending, or small community influence. Industrial Bank, headquartered in Washington, D.C., USA, operates in one of the most politically and economically powerful cities in America, and that location alone gives it access to opportunities many smaller Black-owned banks could never reach. Founded in 1934 by Jesse H. Mitchell, Industrial Bank became one of the few Black-owned financial institutions to survive the Great Depression, segregation, financial crises, and decades of banking consolidation. Even today, the bank remains under the control of the Mitchell family, making it one of the rare long-standing Black family-controlled banks still operating in the country. And over time, the Industrial Bank figured out something extremely important. Relationships can be just as profitable as deposits. The bank generates revenue through traditional banking activities like mortgages, commercial loans, and consumer lending. But its real strength comes from its position inside Washington's financial ecosystem. Being located in D.C. places the bank near government contractors, federal workers, Black-owned enterprises, nonprofits, and policy-driven development programs, all of which create lending opportunities. That matters because commercial and institutional loans generate far larger interest payments than ordinary personal banking. Industrial Bank also benefits heavily from programs tied to community development and minority banking support. As a recognized minority depository institution, it has access to partnerships and funding channels designed to strengthen lending in underserved areas. In simple terms, that means outside money can flow into the bank, increasing the amount it can lend while lowering parts of the risk. And once a bank has larger capital reserves, everything scales: larger loans, larger projects, larger interest income. But perhaps the smartest thing Industrial Bank mastered was stability. While many smaller Black-owned banks disappeared through mergers or financial collapse, Industrial Bank stayed disciplined, avoided reckless expansion, and built long-term profitability through controlled growth and strategic lending. That patience helped it survive while others vanished. But now we're entering the top 3, where Black-owned banking starts operating on an entirely different level of money, influence, and financial reach. Number 3. Carver Federal Savings Bank. Most people have never heard of Carver Federal Savings Bank, but inside Black banking history, its name carries enormous weight. Headquartered in Harlem, New York City, USA, Carver Federal is one of the most recognizable Black-led financial institutions in America, operating in one of the most expensive and competitive financial environments on Earth. And unlike smaller regional banks focused almost entirely on community survival, Carver positioned itself directly inside major urban economic activity where the money moves faster, the risks are bigger, and the rewards can become massive. The bank was founded in 1948 and named after the legendary Black scientist and inventor George Washington Carver. Over time, it became deeply tied to Harlem's Black business community, especially during periods when mainstream banks routinely denied loans to Black entrepreneurs, landlords, and homeowners. But surviving New York banking is expensive, so Carver had to evolve beyond traditional community banking very quickly. Today, the bank makes money through a much broader financial structure that includes commercial real estate lending, multifamily property financing, business loans, consumer banking services, and government-supported lending initiatives. And in New York City, real estate changes everything. When a bank finances apartment buildings, mixed-use developments, retail properties, or commercial renovations, the loan values become dramatically larger than ordinary residential mortgages. That means larger monthly payments, longer repayment periods, and significantly more interest income flowing back to the bank over time. And in places like Harlem and Brooklyn, where property values have exploded over the years, real estate lending became one of the most powerful money-making tools available to banks like Carver. But the bank's strategy goes even deeper than lending. Because Carver Federal is publicly traded, it gained access to capital markets in a way many smaller Black-owned banks never could. That visibility helped attract institutional investors, partnerships, and outside funding that could strengthen the bank's balance sheet and expand its lending capacity. In other words, Carver didn't just rely on local deposits anymore. It learned how to pull money from multiple directions at once. The bank also expanded heavily into community development financing, which often comes with federal support programs, incentives, and partnerships tied to economic revitalization projects. Those programs reduce portions of lending risk while still allowing the bank to collect steady returns. And that combination, urban real estate, government-backed development financing, commercial lending, and investor access, transformed Carver from a small community institution into a far more complex financial operation. But there's another reason Carver matters. Its survival became symbolic. Harlem itself changed dramatically over the decades. Property prices soared, outside investors flooded historically black neighborhoods, and many longtime black-owned businesses struggled to keep up. Yet through all those economic shifts, Carver Federal remained one of the few black-led financial institutions still positioned inside that changing system. And that positioning matters because banks don't just profit from communities, they profit from economic movement. The more businesses grow, the more properties change hands, the more loans get issued, the more money flows through the bank. That's why Carver represents a major leap in this countdown. It's no longer just about keeping a community bank alive. It's about operating inside one of America's largest financial ecosystems and finding ways to profit from real estate, redevelopment, business growth, and long-term urban investment. And if number 3 already operates at this level, then the top 2 banks are playing an even bigger game entirely. 2, Liberty Bank and Trust Company. If the banks lower on this list focused on survival, stability, or regional growth, Liberty Bank and Trust Company focused on something much bigger. Headquartered in New Orleans, Louisiana, USA, Liberty Bank grew into one of the largest and most influential black-owned banks in the entire country. Founded in 1972 by businessman and entrepreneur Norman C. Francis alongside a group of black business leaders during the Civil Rights era, the bank was created with a very specific mission: build a financial institution powerful enough to compete in spaces where black Americans had historically been denied access to capital. And over the decades, Liberty figured out how to turn that mission into a serious money-making machine. Unlike smaller black-owned banks that depend heavily on local consumer deposits, Liberty expanded aggressively through commercial banking, real estate lending, municipal partnerships, business financing, and government-linked development programs. In simple terms, the bank stopped thinking small. One of Liberty's biggest profit engines is commercial real estate. When Liberty finances apartment complexes, shopping centers, office buildings, redevelopment projects, or multi-million-dollar housing initiatives, the numbers become enormous compared to ordinary personal banking. A single commercial real estate deal can generate years of interest payments worth more than hundreds of smaller consumer loans combined. And because many black-owned developers and minority contractors historically struggled to access financing from larger banks, Liberty positioned itself directly in that gap. That strategy became even more powerful after disasters like Hurricane Katrina reshaped New Orleans. As billions of dollars flowed into rebuilding projects, housing redevelopment, infrastructure programs, and business recovery initiatives, banks capable of participating in those financial flows gained access to massive lending opportunities. Liberty used its position inside black communities and its relationships with local businesses to become deeply involved in financing parts of that rebuilding economy. And that's where the scale of modern banking starts revealing itself. Because banks do not simply profit from holding money. They profit from movement, money being borrowed, properties being developed, businesses expanding, projects getting financed, interest accumulating over time. Liberty also benefited from federal programs and partnerships designed to support minority depository institutions. That gave the bank stronger liquidity positions, larger deposit access, and increased lending flexibility. And once a bank has more capital available, it can issue bigger loans while generating larger streams of recurring interest income. But Liberty understood something else many banks ignored. Influence creates opportunity. Over the years, the bank expanded beyond Louisiana into multiple states, increasing its customer base and giving it access to broader markets. It built relationships with churches, black-owned businesses, nonprofits, local governments, and corporate diversity initiatives that directed deposits toward black financial institutions. And every major deposit matters because deposits are the raw material of banking. The more deposits a bank controls, the more money it can lend. The more money it lends, the more interest it earns. And the more interest it earns, the more power it gains inside the financial system. That's how Liberty transformed from a regional Black-owned institution into one of the most financially influential Black banks in America. But even Liberty isn't at the top, because the #1 bank on this list mastered something none of the others fully achieved: national visibility, digital expansion, celebrity-level branding, and the ability to turn Black banking itself into a modern financial movement. OneUnited Bank. At the very top of this countdown sits OneUnited Bank, based in Boston, Massachusetts, USA, widely recognized as the largest Black-owned bank in the United States, and arguably the most modern in how it approaches money, branding, and financial survival in today's economy. Unlike many older Black-owned banks that grew strictly through regional community lending, OneUnited took a different path early on: consolidation and digital transformation. Over time, it merged smaller Black-owned financial institutions into a single, stronger entity, building scale instead of spreading thin. That strategy alone gave it an advantage. Most of its competitors never had size and national reach. But what really separates OneUnited is how it actually makes money. Like every bank, its core engine is still the interest spread system, taking deposits, lending them out through mortgages, personal loans, credit products, and commercial financing, then earning profit from the difference in interest rates. But OneUnited operates this model with a much more modern structure, leaning heavily into digital banking, online account systems, and nationwide customer access, which reduces physical overhead costs while expanding deposit volume across the country. That matters because in banking, deposits are power. The more money customers store in the bank, the more capital it can deploy into loans and investment-backed lending products. But OneUnited didn't stop at traditional banking. It also became one of the most recognizable Black-owned financial brands in America by leaning into cultural visibility and targeted financial products designed specifically for Black wealth building, homeownership, and financial education. This positioning helped it attract not just customers, but attention, which, in modern banking, is almost as valuable as capital itself. And like the other banks in this countdown, OneUnited also benefits from government-supported programs and minority depository institution status, which can open doors to funding channels, partnerships, and deposit programs that strengthen its lending capacity. But what truly pushes OneUnited to #1 is not just how it makes money. It's how it survives in a banking world dominated by trillion-dollar institutions. It scaled through consolidation, embraced digital banking early, built a national customer base, and positioned itself as the face of modern Black banking in America. That combination of strategy and visibility allowed it to outlast many smaller peers while still maintaining its identity as a Black-owned institution in a highly competitive financial system. So while other banks on this list dominate through legacy, real estate, or regional influence, OneUnited represents something different entirely. A Black-owned bank that adapted to modern banking trends and turned digital expansion into its strongest financial advantage. And when you zoom out across all 8 banks, one truth becomes unavoidable. Black-owned banks aren't just surviving inside the financial system, they are learning how to compete, scale, and build wealth inside it. But the real question now is this: if these banks are already moving millions and billions through loans, real estate, and partnerships, what does the future of Black banking actually look like? And that's the story behind the biggest Black-owned banks in America. Institutions built on strategy, survival, and smart financial systems working inside a competitive industry. From small community lenders to billion-dollar institutions, each one shows how money moves when access is limited, but ambition isn't. If you enjoyed this breakdown, like the video, subscribe to Black Status and turn on notifications, because there's a lot more behind the systems shaping how money really works.